Ladies and gentlemen, my name is Tyler Katz, and this is episode 2 of Mad Money. We're going to be talking stocks, we're going to be talking market, we're going to be talking bonds, we're going to be talking everything that has to do with the U.S. financial sector, your go-to news site right here, baby. Let's be talking about what happened last week. So, last week, the Trump administration and Trump effectively signed in a $2.2 trillion stimulus package. What does that package include? You might be asking. Well, if you make under $75,000 in the United States, you'll be getting $1,200 per individual. And if you're married, you'll be getting $2,400 if your joint marital account is lower than $125,000. Now, Tyler, this is crazy, you might be asking yourself. Direct cash payments to consumers? What is that going to look like? Well, here's what I think. The Democrats did a good job on this bill because giving money to Americans that need it the most, they're going to be spending that money on bills, they're going to be spending that money on food, they're going to be spending that money on rent and vital things that they need to stay alive. You might be asking yourself, Tyler, what's going to happen with the 3 million increase, 3 million percent, or 3 million people that recently filed for unemployment? What do I think? I think it's going to get worse. But next week, I think that number is going to go down specifically because of the money that we see the Trump administration impacting and injecting into the economy. I think this next week, the market is going to be going up, but I do think that long term, the population is not going to be intelligent to stagger this $1,200. I think it's going to be spent quickly on material things and maybe some rent and some good, but I think inevitably the market is going to go back down. I think unemployment's going to increase, and I think things are going to get a lot worse than they are right now. Now, the other bad part of the bill that the Trump administration proposed was something called corporate bailouts. This is providing big Fortune 500 companies with massive amounts of cash influx that are supposed to help them pay and stay alive and stay afloat. I don't like this model of capitalism because I think giving bailouts to people that are already super wealthy and have a lot of money is never a good model. While I do think that maybe it's going to help corporations in the short term keep their economy afloat and keep their assets open, I think in the long term it's just going to make the corporation and the corporate mindset stronger and lead to more stock buybacks in the long term, which is only going to help the executives. We also saw in the news that a senator who, believe it or not, went to Wake Forest University, which is the college I'll be attending next year, ultimately sold $16 million in stock after he advised American consumers to buy more stocks, or vice versa. I'm not sure. This is obviously pretty problematic, and we should mandate that senators financially disclose all their public positions or are not allowed to have those positions in the first place. I'd advocate for the latter. Now, do you think the recession is coming soon, Tyler? It's a great question. I do think it's coming soon. Next week, I think we're going to see a short squeeze. We're going to see stocks go up because of the stimulus created by the Trump administration. But I think in the long term, it's going to be down. I just read an article from Robinhood and the New York Times that says experts predict on the International Monetary Fund that this global recession could be worse than the '08 recession and the housing bubble. While we don't have a same problem, the coronavirus is going to shut down businesses for the long term. Stay-at-home orders have already been placed in many different states, and the outbreak is not slowing down. We can extend the curve and try and make the curve go farther out and less high to stop overwhelming the health system, but I don't think that's going to be good for stock markets. I think it would be better for stock markets if it was a short, big increase and then a huge decrease in cases, a massive pandemic. Obviously, this would not be better for society. This is not what I'm advocating for. I just think the long-term stretching out of the stock market is not going to be good, but I do think it will be better for society as less people will die and the health system will not be overrun. Thank you to the nurses, to the ER workers, and to all those people in the healthcare systems making it work, keeping people alive. That's the end of the segment. I do have a question. Caller?
Hey, Tyler. First off, let me say I love the show. Your predictions
Thank
last
you.
week were spot on, and I made myself hundreds of dollars. So my question is, do you think I should reinvest this money back into the market, or should I hold on to it?
Thank you, Tarif. That is a great question. Here is my advice. I would say do not invest in the market right now. Last week, we saw that the biotech ETF went up, and we saw that the S&P 500 went up, and the SPY calls, and the puts went down. So, my call prediction was correct. Two specific stocks we're going to be taking a look at today. American Airlines, I called this a buy. I said it was a buy. I said buy at $11, and look what happened. We're sitting at $14 right now, ladies and gentlemen. $14. Where did I say buy? Last Tuesday, it was at 10.02. I sold my puts right there. The calls went up. $14. Stocks up 40%. You want to know why? Because the stimulus package. If you're in airlines right now, I sell now. Later this week, Buy 3 to 4 weeks from now. The other stock we were looking at is Carnival Cruise Lines. When did I say to buy? $12. What is it at now? $14.40. There was a massive cruise bailout, but I would be worried about cruise ships because they're still going and there are people getting infected now. But the last thing we're going to be looking at is the S&P 500 itself. Last week, what did I say? We were dipping between 2,200, but now we're up to almost 2,500. It's the short squeeze that the Trump administration is putting on the economy. They're going to artificially inflate it. They're going to make it really big in the short term, but in the long term, it's going to come crashing down because, quite frankly, even if the Fed has lowered interest rates, the economy is just not going to be working. People aren't buying bonds from the federal government. Everything's super low. There may be borrowing from the federal government, but that's not going to help raise lower level salaries. Now, the biotech ETF. We've seen a big increase in the biotech ETF. And ETFs are supposed to be steady, and we've still seen a 10% increase in a 5-day time window. That's a pretty good looking. My advice, don't invest the money, Therese. Keep it for the time being. When the economy goes into what we call a technical recession, which is month by month stock market decline, then I would say buy back in, buy biotech, buy airlines, and make sure you're going to stay safe. Ladies and gentlemen, that's your segment of Mad Money. Thank you for joining me. Have a blessed day.